Alright, so today we're going to be talking about market structure, what it is, how you use it to identify the trend. We're going to go for examples and how you can add it to your strategy. It is one of the most important things, and I'm going to get straight into it and not waste anyone's time. So first things first, what is market structure? Pretty self-explanatory. It's how the market is moving and the structure that is created while it's doing that. Easiest way to see if buyers or sellers are in control, in my opinion, and it is one of the most vital aspects to trade in. If it's price action strategy, market structure is one of the most important things when it comes to price action. You should already know bullish, bearish. Bullish means that the market is going up, buyers are in control. Bearish means the market is going down, sellers are overall in control. Let's say that the market is doing this. Market started here, we created this. I'll explain what it is in a minute. So we went up, we went down, but we didn't go lower than this area where it started. We went up again, we went down again. We didn't go lower than where this move started. Then we went up and we pushed for our final move. These are higher highs because this is the highest point that price went before it retraced. This little movement is called a retracement. The reason why we don't call it a break of structure, because these little points are our structure, the reason why we don't call it a break of structure is because it hasn't broke any structure. Pretty self-explanatory. If it come down here like that, now this point would be a break of structure, but we'll get more into that. So we came up again and we broke this structure right here. So this would now be called a break of structure. This move and this little push past this area is now a break of structure because we broke past the structure that we created here, this bullish movement. We're going up, we're creating higher highs, we're creating lower lows. This is a lower low because it's the lowest point that price went to before it pushed back up, broke structure, created another higher high, then it come back down, created another lower low, came back up and broke structure once again. This is basically how a bullish market moves if everything was absolutely perfect. This is how a bullish market would move. It's the exact same for a bearish market as well. All we need to do is invert it. Invert the scale and you can see the exact same thing happening, but for a bearish market. Now, instead of calling it higher highs and lower lows, it's just the opposite. So here we have our lower lows, and then here we have our lower highs because we're still in a bearish move. We're still going down. We're not creating higher highs because we're not going above this right here. This is now a lower high. Then we have another lower low, and then we have another lower high. This is the basic fundamental of market structure. A lot of you guys already know this, so you can probably skip past this, or you probably already have skipped past this. But this is just basic. This is just basic market structure. You can teach this to a 5-year-old and say, is this going up or down? And they will say this is going down. It's very, very, very straightforward. The first example that we have is for a bullish move up. This is quite decent looking price action. As you know, it's not perfect to the line, but if we get our path tool, we have our lowest low here, then we made a higher high. Then we made a higher low, then we made a higher high, then we made a higher low, then we made a higher high, then a higher low, and then a higher high. And if we was to bring this all the way out, so now you can just see the path. This is exactly what we was talking about. Exactly what we was talking about. We have our lowest point here where the whole move started. Then we have our higher high. Then we have our higher low, but it's not a lower low because, or a change of character or break of structure because we didn't break our highest low there. And then we have our higher high right here. Now we have another higher low right there, then a higher high, then a higher low, and then the top. And it's as simple as that. Obviously it doesn't look as perfect as if I was just to do that, but it's not going to look like that every time. It's more realistically going to look like this. The hard part is about identifying it for yourself and seeing the market structure and seeing what that means and not misinterpreting that. So the same thing applies for bearish market structure or sellers being in control. We have quite a steep drop here, but if we get our path tool out again, we can see the same pattern and the same bearish market structure. We have our highest low, then we have a lower low, we have another lower high. So if we get our paths tool out, we're going to see the same market structure and the same bearish trend. Just like this, we're marking our lower high, then our lower low, then our lower high, then our lower low, say like here, then our lower high, then our lower low, then our lower high, and then our lower low. And once again, if we drag this, it's basically exactly what we was just talking about. And like I said, it doesn't look absolutely perfect. The lines are not going to be the same amount because that's just not how the market is. But it's still the same principles. If we highlight everything, it's still absolutely the same principles. These lines that I've just put on the charts is what we call our break of structures. Break of structure is basically us pushing down from for a sell, for example. This is our lower low. We created our lower high and then we pushed down and we broke this lower low. This means that this is a continuation and price is following the trend that has been set. We have our point, we come down, we came back up, we broke this lowest low, we came back, we created a lower high, then we broke that lower low right there, created another lower low, made another lower high, broke that lower low, created another lower low, and then made another lower high and done the same. All of these are called breaker structures. So we have one breaker structure, two breaker structure, three breaker structure, four breaker structure. And that, like I said, in a perfect ideal world is what we'll see. Next, we'll move on to the change of characters, which can be how we see shifts in market structure. All right, so if we clear our chart and now we're back to the plain canvas, it's going to act as if the market is going up and then we'll see a shift to the downside. So buyers are in control and then we see a shift to sellers being in control. We start off with price going up, creating our higher highs and our higher lows, higher highs, higher lows, higher highs. If price was to, instead of create a higher low, it was to now break this high low right here, this is now called a change of character because the market is no longer following normal bullish character or normal bullish characteristics, because we're not supposed to be breaking these high lows. Then we come back up, we created a lower high. This will be a lower high now, and this will now be a lower low. So this right here is our higher low. And because we have now breaking it, we have now created a lower high. This is a change of character to the downside. Change of character showing that sellers are now in the market. Then we came back up and we created a lower high, like going back to bearish characteristics. This is now a lower high. We come back down and created a lower low. This started off as a bullish move or a bullish trend. We come down, we had a shift, change of character, change of characteristics in the market from buyers to sellers. Then we came back up, we had our little retracement, and then now we pushed back down, created our lower low, and now we are in a seller's market. Just like that. And the same thing can happen back into a buyer's market. We have our lowest low right here. We can push up, having a change of character right here, because this once again is a change of characteristics. And then we come down, we create our higher low, and then we come back up and we create our higher high. And this is basically just how the market moves. All of these would be our breaks of structures, but the first one would be the change of character, going from a buyer's market to a seller's market, or a seller's market to a buyer's market. This would be our change of characters. And then every break of structure after that, or every push up, for example, every push from this highest high to creating another highest high to creating another highest high, that would be our break of structures. Okay, quick tangent. If you've got this far, you may as well subscribe. And if you're feeling really generous, then drop a comment, because it does help with the algorithm a lot. Now, there's another way that we can have our change of characters, and it is a little bit harder to identify if there is actually a full shift or if the market is just playing around, and I'll show that right now. This might look like a higher low, and it is absolutely correct. Say we come up, but instead of going past the last higher high, we push down and we break. This is now a change of character once again, because this isn't following the characteristics of a bullish market. If we add our points once again, and we can see that these highs didn't go past these highs, and this is the highest high. So now this is a change of character, because we came back, we had a push up, and now we've broke this, and we can anticipate that price will now start creating lower highs and lower lows, just like that. Same thing can happen for price going back up or having a change of character to the upside. We can go up, we can have a retracement to the upside. We just think that this is going to be a lower high, but instead it goes down. It doesn't fully break our lower lows right here, and then we start pushing up. This is another way that we can see it, instead of just big moves like that. When that happens, that doesn't 100% mean that the structure has changed. Once again, let's say the market is going up, and then we have a retracement, and this push up, it doesn't fully break our higher highs and it goes down like that. We would say, yes, this is a change of character. We can anticipate for price to go back up and then start to push back down. And now we are in a seller's market. Sometimes this sellers take control very partially of the market, but we still continue and push up. This is still a change of character. This right here is another change of character. This is a change of character saying that we are now in a seller's market or sellers have control. This is a change of character to say we're now in a buyer's market or buyers have now took control back, because we have our points here and here and here. Overall, if we were to look at this, we would still say it's going up, but we still have these retracements right here. What gets a lot of traders out is we can have something like this. Now, when we see something like this in the market, the overall trend is bullish because the bigger moves are up. We are clearly pushing up, but these small bearish change of characters and these small retracements will catch a lot of traders out because, say, for example, you see that it's going down, you see the change of character, boom. Now you take a sell here, you get it on the highs, you've just lost all your money. Once again, you see the change of characters right there. You think, okay, now sellers are in full control. You put your stop loss on the highs. Once again, you would have lost. Do you know what I'm saying? Instead of you see the bullish trend and then you do that, you get in on the lows and it would have went to your targets. These retracements is really what gets a lot of traders out. So you have to really know what you're talking about. Now, one way to not get caught out by these is what I call major breaker structures and minor breaker structures, or major change of characters and minor change of characters. These to me are very minor change of characters because these are not big moves. These little points right here is minor structure levels, because not big moves have come from this didn't create a big move, this didn't create a big move, this didn't create a big move, and this one didn't create a big move. These are minor structure levels. These are major structure levels. So this breaking this major structure level is way more important than this breaking this minor structure level. If, for example, we came all the way down and we broke this major structure level right here, and this was our change of character, I would anticipate with a higher probability that price is now going to go up and then start coming back down just like that, purely because of the fact that these are our major structure levels and them are the ones that have been broken, instead of these little minor structure levels being broken. That's not to say that just because it's a minor structure level that it can't continue from that, because it absolutely can, but it just doesn't have the highest probability compared to major structure levels from what I've noticed and the strategy that I trade. An example of this can be this little area right here. If we look at this and we got our path tool once again, we can see we created our high, but then we come down and it looks like there's a change of character, but we continue to push up. If we get our path tool and we bring this up, this is exactly what we was talking about before. We have our highest low, we have our highest high, and then it looks like we're creating another high low for us to break back up and continue pushing up to the upside and buyers continuing to be in control. But what actually happened is we had a small move up and then we had a change of character and we broke this structure level. So this is now bearish characteristics. But because this is only a minor structure level and it's only created a minor move, then we start pushing back up and we break this major highest high from our original move. We create a new higher high. We create a new lower low. And then we push back up and create a new higher high all the way up here. So it doesn't look super straightforward and super perfect, but this is still a bullish move overall. Okay, so another thing that I want to go through is ranges or consolidation. It goes by a lot of different names. Now, range is when the market isn't creating necessarily higher highs or lower lows, or lower highs and lower lows, but it is just moving up, down, and they're kind of bouncing off each other, just like this. This is a range market. When we're looking at this, we don't necessarily know if the market wants to go up or if market wants to go down. There is basically a 50-50 even battle between buyers and sellers. There's not more buyers in the market and there's not more sellers in the market. Now, when I see this, I don't necessarily know the bias on the market, so I don't know if necessarily I should be taking buys or if necessarily I should be taking sells. It really is strategy dependent on what you do in this kind of situation. Some people don't trade ranges whatsoever. Some people like to short the highs and buy the lows, and buy the dip or sell when it's high, things like that. That's really dependent on your strategy. I'm not really going to go through the full strategy that I trade, but I just wanted to go over that anyway. Like I said, I think market structure is very important to your strategy because you can identify the trend and you can see if buyers are in control, sellers are in control. How you should be using it for your strategy is as another confluence or as your bias. Doesn't necessarily mean that as soon as there's a higher low created, you take a buy, or as soon as there's a lower high created, you take a sell. That is just not how trading works. It's really not that simple. But this will be one of the biggest things that you can use to your advantage, and I'm sure you guys already know that as well. My Instagram is on screen. If you want to ask any more questions about market structure, about anything else to do with trading, or anything you want me to make a video on, shoot me a DM over there. Thanks for watching.